Warmly welcome to Inside Asia, a podcast by SEB where we try to connect the dots and make sense of what's going on in Asian economies and financial markets. My name is Fredrik Hahnel. I am head of Asia for SEB and general manager of SEB's Singapore branch. We're recording this in Singapore, and with me again to discuss the latest in Asia is Sean Yokota, head of markets at SEB Singapore. Hi, Sean.
Hi, Frederick. Nice to be back.
So, Sean, what is the latest in Asian financial markets since our last pod?
There's good news and bad news, as always. The good news is that we've got a clear policy towards big tech companies in China like Alibaba. Jack Ma, finally, we saw him on social media, and it was on purpose, I think, from the Chinese authority to kind of show that tech is back. And they split Alibaba into 6 different units, and that kind of clears some fog on how they should be handled going forward. They were concerned about them as being too monopolistic, and that was hurting the sentiment in Chinese tech. But now, with one move further, I think that clears it up and makes it good news for the investors. But the bad news, of course, is coming from the US with the Silicon Valley Bank and the issues in the US financial system. And this is where um, China or Asia overall is once again reminded of how problems in the US spreads to problems in Asia. That it dries up US dollar liquidity here and it dampens sentiment and activity here. And they're just kind of sick that if US can't manage its banks, why is this impacting us? So I think this is what we're going to get into today. But yeah, that is a negative thing that's transferring over to Asia right now. How about you, Frederick? What are you seeing?
Well, of course, there's been a lot of talk about Xi Jinping's visit to Russia and the meeting with Putin, and there's been a lot of disappointment around the world, that he didn't put more pressure on Putin when it comes to Ukraine. But if you look at this, from a broader perspective, where has he been ever since China opened up after COVID? I mean, Xi Jinping didn't travel for 3 years during COVID. And right after they started opening up, he went to the first visit was to Indonesia to take part in the G20 meeting. That was kind of Xi Jinping's comeback to the international political scene. On the way back from that meeting, he made a stopover in Thailand, and since then, the only trips he's made to other countries has actually been one to Uzbekistan and Kazakhstan for the meeting with the Shanghai Cooperation Organization, which is a security organization, China's answer to NATO, if you will. Um, After that, he visited Saudi Arabia, and then he had this meeting with Putin in Russia. These two latter countries being two of the most important suppliers of oil to China, so that's quite interesting, and we'll come back to that later. But apart from that, he hasn't traveled much and he hasn't visited any Western country. But at the same time, you've seen this long line of visitors coming to Beijing to meet with Xi Jinping and other ministers. And you've seen the leaders of Singapore coming with a big delegation of companies for to sign business deals. The head of Malaysia has come. You had the Bundeskanzler from Germany coming again with a delegation of companies. And you had the Prime Minister of Spain coming. You've had Macron coming from France. You have had the leader of the EU coming, von der Leyen, at the same time. And France also brought a delegation of French companies with them at that time. And Airbus, for example, signed a deal with China for more purchases at that point as well. The foreign minister of Japan has been here. The foreign ministers of Iran and Saudi Arabia were here to sign off this peace agreement that is a bit of a feather in the hat for Xi Jinping that China actually enabled. And now today you have the president of Brazil here with a big business delegation as well. So this reminds me a little bit, of when China was a dynasty. The last dynasty was the Qing dynasty. For example, when you would see the governors of the faraway provinces coming to Beijing, and in one case even, England sent a delegation to come to Beijing to from China's point of view, pay tribute to the to the emperor, and also in the case of England, asking China to open up more of its harbors and starting to do more business and buy more products from from the West. And so, I think there's a little bit of this reminds me a little bit of that, because Xi Jinping has been, had the luxury of sitting in Beijing, and then everyone has just come and try to push their products to China, but also, of course, asking for Xi to step in and put some pressure on Russia and and enable what everyone hopes would be a negotiation of an end to this war.
Yeah, geopolitics is a hot topic right now, and I think that kind of takes us to today's topic, which is China's currency and the renminbi.
Yes, exactly. We thought we should zoom in on the renminbi today, as China has recently signed a number of agreements with other countries to trade in their own currencies, thereby ditching the US dollars. So there's a lot of talk right now about the US dollar potentially losing its reserve status over time, and that the renminbi will take over. And this is, of course, something that alarmists in the US say is imminent, while skeptics say that this is quite far-fetched and pretty much impossible, since China doesn't want to fully liberalize its capital account and make its currency fully convertible, open up its capital markets, etc. Sean, what camp are you in? Do you think that the renminbi can challenge the US dollar to become the world's reserve currency, or do you think it's going to play out differently?
I think it can happen, but it needs to be measured in decades, not years. And so when we talk about this topic of currency internationalization, I think it's best to frame it by going back to what we learned in first year economics class by defining the three characteristics of money and how strong a country's currency is based on these three properties. So the first one is it's called the medium of exchange, and that's how good is the infrastructure or pipeline for money or your currency to be easily moved. So if we kind of look at China statistics right now for this, there's a thing called a SWIFT payments, which is messaging of how to send money internationally. And right now, renminbi only makes up about 2% of that volume. And if you compare it to like 5 years ago, it was 1.9%. So there's not that much of a change. Whereas if you look at the dollar right now, it's about 40%. So almost 20 times bigger than China is. And you can see how like these China numbers are still relatively small, because if you look at China's share in global trade, they make up 13% of total trade in the world, but only the currencies only use 2% of the time. So despite its big trade volume, the currency is a bit of a disappointment. The second one that we usually talk about is called the unit of account, and that it just standardizes, so it's easy to measure things when things are moving. So if you have like a pipeline and oil goes through it and you receive it, you kind of measure it in a standardized way, whether it's barrels or in dollars, and not something like how many chickens it's worth or how many cows it's worth. It just makes it easier that way. So this is the one probably renminbi is the most behind. I don't know too many things where it's priced in renminbi. The only thing I know is iron ore that's coming out of Dalian in northeast China. That's in renminbi per metric ton. But very few things are in renminbi just now. And then the last thing is the thing called store of value. So how good is it in holding the value, and is it predictable? So if you send something through the pipeline, hopefully by the time you receive it, the value of it is relatively consistent. And this is something renminbi and China is still working on, but probably a bit behind as well. So if you look at central bank reserve holdings or something, China or renminbi is about 2.8% still of what central banks hold, versus dollar is closer to 60%. And if you look at foreign bond holdings in China, so like how much do foreigners own China's government bond market, it's still very small. It's about 2.3%, tiny. Whereas if you look at like the US Treasury market, 30% is owned by foreigners. So it still has some work to do. And but it's good to have kind of this framework when we talk about currency internationalization. But I mean, before we go further about this China strategy, um, Maybe you can give us a bit of a background on why China's trying to do this, because it usually has a long-term strategy. So you don't have to go back to the Qing dynasty, but maybe something in the last 10 years on how this came about.
Exactly. No, I will. I think I'll go back to the financial crisis in 2008, but, because I think that basically the reason what's happening now, I think the trigger is clearly, if you look at more countries now signing agreements with China to do trade in their respective currencies, including also the renminbi, of course. I think that's very much the result of basically the US basically weaponizing its financial system right now to punish Russia for the invasion of Ukraine, and this is very effective. I think that an acceleration now has taken place because of these U.S. actions against Russia, since a number of countries around the world now also think that maybe they have a good relation with the U.S. today, but they may be quite vulnerable in the future, and if these relations change, and therefore for they're diversifying a little bit away from the US dollar. We'll come back to that. But yeah, you're right. China has had a long strategy, an ambition to challenge the US dollar and make the renminbi more of a world currency. And that goes back to criticism of the US monetary policy, making many other countries very vulnerable to extreme measures that we've seen from the Fed ever since the financial crisis in 2008. And therefore, from that time, basically, Chinese officials identified that the US dollar based monetary system as a contributor to the crisis, and a source of systemic risk for the global financial system. And this then led to a program for the internationalization of the renminbi, which has also led from time to time to also speculation as to whether the renminbi could potentially replace the US dollar as the world's principal reserve currency, not least because of its, the size of its economy and its size of its trade. But like you mentioned in your statistics just now, Sean, it hasn't really been so successful so far. But the question is it different this time?
Replacing dollar is always a tall order. And so I think China is trying to do smaller goals first, and that's to make the currency a regional power, so within the Asia region. And it's similar to how the German Deutschmark was before the creation of the euro. So it never overtook the dollar or came close to it, but is clearly the most dominant currency in Europe. And most currencies in Europe were priced kind of relation to the Deutschmark. So it was like the French franc versus the mark, or the Italian lira versus the mark. And I think that's kind of where China wants to get to first. And it's a good match because Germany is a manufacturing powerhouse. It's an export powerhouse. So then they're used to using its currency for trade and for foreign exchange. And that's how China can replicate that model. So, for example, if you want to buy the Thai currency, Thai baht right now, China's goal is that first you take your dollars and you buy renminbis with it, and then after that you take the renminbi and then buy Thai baht with it. So they're the middleman that sits there because that's the currency that creates the most liquidity in the transactions.
If you just look quickly at the statistics, what it's looked like, Sean, because I think that's an interesting thought that the renminbi will start to become more important in the Asian trade. And I think we'll talk a little bit more about that in a while. But if you look back in the decade between 2009 and 2019, 96% of all trade invoicing in the Americas were done in US dollars, whilst it was 74% of all trade in the Asian region and some 79% for the rest of the world. So there we have a little bit of a what it has looked like, and we can discuss more what it will look like in the future. But let us go deeper into these three properties of money for the RMB and see where China is today. And let's start with the one you mentioned first, which is also mostly talked about, in particular recently, which is the medium of exchange and infrastructure. And as I said before, I think if you start with the countries that have been mostly mentioned recently, it's been the countries that fear U.S. sanctions, and here you of course have countries like Iran and Russia. But if you look at trade more in general, and as we've discussed in earlier podcasts as well, the Asian intra trade is much bigger today than it was, say, 10 or 20 years ago. And as we also mentioned several times now, China is the clearly the biggest trading partner of most of the Asian countries, or in particular the ASEAN countries, the 10 Southeast Asian countries. And it's also becoming one of the leading investors in the region. So it's a growing role in funding infrastructure in the region, as well as as the big trade, of course, give them an opportunity to increase the use of renminbi in both these areas. And actually, the launch of this huge free trade agreement, the Regional Comprehensive Economic Partnership, or RCEP, as it's usually called, which is a trade agreement between the ASEAN countries and 5 other Asia Pacific nations, including China. People usually refer to this as the biggest free trade agreement ever, if you look at it geographically speaking, or in terms of the population that it covers. This will most likely also accelerate the use of the renminbi in trade settlement. And as a matter of fact, if you look at recent meetings between the ASEAN countries, they recently met. I think it was the finance ministers met in Indonesia. They specifically talked about this, that they want to increase the use of local currencies in the intra-Asian trade. We've seen the same in meetings among the BRICS countries, the Brazil, Russia, India, China, and South Africa. That they're also talking about more about this, replacing the US dollar with more settlement in their own currencies. But also, if you look at other emerging markets and developing countries around the world, if you can look at Chile, Turkey, and Argentina, the renminbi is increasingly used there as well, et cetera, et cetera. And more recently, of course, you have Brazil, which is a huge trading partner today for China. Their trade is roughly 100 billion US dollars. And the two countries have now decided that they want to switch from US dollars to more of using their own currencies, the real and the renminbi instead.
And to keep it safe, China's, I think, moving with this bubble or a closed loop strategy by lending renminbi. So, for example, if Indonesia wants to create a aluminum smeltering factory, China would lend them renminbis, and then Indonesia would take those renminbis and buy parts from a Chinese supplier and pay them in renminbi. And then at the very end, with the end products what that Indonesia has, they can sell those things to China as well, and then they can pay in renminbi. So everything is kind of closely knit.
Yeah, and here also, of course, the development banks come in, right? China has several of those, and the biggest one is, of course, China Development Bank that provides this financing for many emerging markets. That's quite interesting. And I just want to mention another number because I think that if you look at China's own trade specifically, of course, here is where they can really decide to switch settlement into renminbi, and a lot has actually happened there. In 2021, out of China's own trade in goods, 14.7% was settled in renminbi. But for the first 6 months of 2022, it actually jumped to almost a third. So that's quite interesting. Um, if we stay for a while with the subject of the renminbi as a means of payment, Sean, and apart from substantial trade relations, which is a prerequisite for it to be successful, what other prerequisites are there for the renminbi to succeed? Can you really just switch currency from US dollars to any currency?
It's difficult because you need a infrastructure to do this. And there are basically three parts to this infrastructure. So the first is a messaging system, just similar to like Swift that you have, that tells you instructions on how much to send and in which format and which currency. And then second, you need a settlement system or kind of a correspondent banking system that you can transfer the money from one place to the other. And the third thing you need is liquidity so that there's enough around for you to use that currency. And this is where US has done very well, kind of dominating in all these three areas.
I mean, if you look at the Central Bank of China, the People's Bank of China, PBOC, they've been putting the financial market infrastructure in place for quite some time now to facilitate the renminbi settlement. And this is happening in steps, right? First of all, it has authorized renminbi clearing banks in, I think it is 8 of the 10 ASEAN countries. At least I know that it's happened in Singapore, Malaysia, Philippines, and Thailand, but also elsewhere outside of the ASEAN countries. And due to, if you go then to liquidity, due to China's tight capital controls as well as its constant trade surplus, which means that China is actually importing more goods than it exports. Therefore, sorry, it exports more goods than imports, which means that it also doesn't export the currency, meaning that there is a very limited liquidity overseas, limiting the renminbi's availability for global usage. And to address this, the PBOC has launched initiatives to set up bilateral swap lines, which has been basically between the PBOC and other central banks in a number of countries. And it started with neighboring Asian countries, and later they did it with a few advanced economies as well, including Canada, Europe, the ECB, as well as the UK. And as of 2022, there were actually 40 such swap lines amounting to some 4 trillion renminbi.
Increasing liquidity it's very important, and these swap lines they kind of act like lenders of last resort, so that in times of trouble, that these swap lines from the PBOC are supposed to provide liquidity so that you wouldn't have any of these crises. So it plays a very important part. Another important part that China is doing is trying to develop a kind of this settlement payment system on its own, and it's called CIPS, CIPS. It's called China Cross-Border Interbank Payment System, and it started in about 2015. And so what this CIPS is trying to do is it's trying to compete with the messaging part of SWIFT and also on the payment part as well, kind of the two layers. And it's trying to do a good job, but it's having a hard time as well, even though these infrastructure is set up. So if you look at the volumes right now, what SIPS is doing in relative to Swift in terms of messaging, it's about 1% of the volume. So it's still very small in volume. And then what China's doing is actually working with Swift. So most of the messaging is still using the Swift system. Now, when it comes to this payment and settlement system and how that's doing relative to the US, still again, the volumes are about 2.5% versus the US dollar equivalent settlement system. So these things are in place and it works. It's just that the volumes are still relatively small. And like general banking or anything, I think trust is the main issue. If we send a WhatsApp message and it doesn't go, it's not a big deal. But if you are trying to send a payment or someone's pay, for instance, and they don't get it, they're going to get super upset. So it has to take time for this trust to build. And it kind of reminds me of the made in China label that you used to have 30 years ago. Maybe if it said made in China, maybe it wasn't such a great, trustworthy product. But you kind of think of it now, some of these products that are made, especially in electronics, made in China has good quality. But then maybe we'll move to the next property, which is the unit of account and how China's progressing in this area.
Yes, let's talk about that. And when it comes to the currency as a unit of account, of course, this is usually related to commodities and that kind of trade, right? And of course, oil is of particular importance here due to the history of the petrodollar that which made the US dollar so dominant in basically ever since the 70s. All oil in the world has been priced in US dollars. And if you're trying to, or for China to boost the use of renminbi, this is also an important part, trying to boost the amount of renminbi denominated oil trades. As it is, the second largest importer of oil in the world after the US. It's not a big difference between the two, actually. And here, Saudi Arabia and Russia are, of course, of particular importance, being the second and the third biggest oil producers in the world after the US. And both have now decided, and these were the two countries I mentioned at the beginning that Xi Jinping have visited here recently. And both of these two countries have now decided to accept payments for oil in renminbi. But it goes beyond oil. China's National Petroleum Corporation, for example, signed an agreement recently with Russian Gazprom to pay for Russian natural gas in renminbi, and as well as rubles instead of US dollars. And last year, some Indian companies started paying for coal imports in renminbi rather than US dollar. And a more Western example was France's energy giant Total Energies, that together with CNOOC, the Chinese company, recently completed their first renminbi settled liquefied natural gas or LNG deal through the Shanghai Petroleum and Natural Gas Exchange. So a lot happening here. But what are your thoughts on this, Sean? First of all, why is the petrodollar so central to the dominance of the US dollar historically, and can the renminbi really replace it?
Geographically, I think it is a extension. I mentioned before about regionalism and trying to influence the neighbors to use renminbi. And this is a one-step extension that they want to move this over to the Middle East. So it is an expansion, I think. But again, to replace the dollar being priced for oil into renminbi, I think that's going to be a very difficult thing to do because it's not just the oil that you need to be priced in dollars. There's an oil ecosystem that's built, whether it's like the futures market that you can use to hedge. So there's so many different things that it's really difficult for renminbi to beat. So I think China's strategy will be to start small. So pick small commodities that's not that competitive. So maybe something like China's very good in rare earths materials. So they can get those priced in renminbi and kind of try to build a ecosystem around that and then make it a more of a unit of account. Maybe in the interest of time, we'll go to the last one, which is the store of value, which is the third property of money. And this will be another tough one to crack because China has to open up its markets for foreigners to invest. And that means you could risk control of it. And it does go against the principle of the way the country itself is governed. Well, let's see. I think they're really hoping on technology to help this out. That allows you to open up, but allows you to track and control the flow when you need it. So this kind of reminds me of the Apple AirTag I use for my luggage that I put in, and then if it ever gets lost in some airport in Dallas, I can always find it. I think that's the kind of thinking that they want to do to start opening up. And then again, if you look at the basic stats of this store of value, central bank holding is a good measurement. And from China's point of view, renminbi is about 3% of the holding for central banks globally. It's gone up from 1%, so it's increased, but it's still a small amount. And then compare that to something like the dollar, it's still about 60% of the holdings for central banks. So dollar dominates. And then if you look at things like the foreign ownership of bonds again, in China's case, it's about 2.3%. Foreigners only own 2.3% of China's bond market. And again, if you look to the US, it's about 30% of the treasury market is owned by foreigners. Um, but if you want renminbi to be the big store of value, you need products basically. What are you going to do with the renminbi that you have? You have to buy some kind of product. And I think this is where Hong Kong starts to play a little bit of a role. So, Frederick, you moved from Hong Kong in 2022. Maybe you have some insights on this side.
Yes, you're right. China actually identified Hong Kong as its global offshore renminbi business hub with the strategy to increase the offshore renminbi liquidity there and improve the financial infrastructure and introduce more renminbi denominated products. And here, of course, we have the whole CNH market, which is the H stands for Hong Kong, which is basically the offshore renminbi market where a lot of not least foreign firms issued renminbi denominated bonds earlier, and they used the proceeds from this, not least to invest into China. It's been this market has come and gone a little bit, and it hasn't been so hot in the last few years. But you've seen recently, not quite a few Chinese companies and as well as the Chinese government and local governments issuing bonds in this market, which can then be included in portfolios for international investors. Uh, but in Hong Kong, you also have the Connect schemes, the bond the Connect scheme and the equity Connect schemes, where foreign investors can get access to onshore equity and bond markets. And exactly like you said before, China wants to control these flows. So these are basically quotas, daily quotas that China allows for, and so that money can flow into China and out of China. And likewise, onshore investors also get access to offshore products in Hong Kong through these schemes. There's also been another recent initiative called the Swap Connect, which is a program that will allow offshore investors to get access to the Chinese mainland interest swap market, which is quite important for bond investors into China, that they can hedge their interest rate risks. And another initiative that is quite interesting is the Core Climate Initiative, which is the first international carbon marketplace offering both Hong Kong dollar as well as renminbi settlement of trading of carbon credits. So yes, Hong Kong is important, and this is also where quite a large pool of the offshore renminbi deposits are. I think it was 900 billion renminbi at the end of last year. Still very small, but at least it's quite important for this market. Sean, we are approaching the end of this discussion. We have a couple of more discussions that we thought we should discuss in this pod. So we just quickly take them. If we start with the first one, which is what is China doing next from an economic or political, for that matter, point of view to increase the renminbi status as a reserve currency if we look into the future now?
Of course, China's renminbi strategy is tied to a much bigger strategy that China has. And right now, it's the one called the dual circulation strategy. It's part of this year's 5 year plan. And dual meaning two, that one engine of China's growth is the exports and tied to the global market supply. They want to continuously build that to export goods outside. But the second one that they really want to start to building is this domestic demand and get Chinese consumption to increase. And this is the one where it acts as a hedge to the US consumer, which is right now the biggest engine of economic growth in the world. They want to start to lean off of that and start to create their own engine so that they become independent from the US. Um, yeah, so this is where the renminbi internationalization is tied to. It's coming from this dual circulation strategy to be less dependent on the US.
Yeah, and and I think China will continue to leverage on its dominance in trade, as we've seen already. Wherever they have a strong position or a strong bilateral trade relation, I think that they will push more for the renminbi or the local currencies of the two countries to be used in trade. Um, I think that it will at any it will try to whenever it can to reduce the dependence on the US dollar. And one interesting thing is just to look at China's own foreign currency reserve, for example, where it used to be very dominated by holding US dollar treasuries. That portion has gone down quite a bit over the years. And recently, China's central bank has also been buying a lot of gold. But I think it will also gradually allow more ownership of its bonds and equities. But how far will they really go in this, opening up its capital account? Will it change its mercantilist behavior and allow a trade deficit so that you increase the renminbi liquidity offshore simply by importing more than they export? I doubt it. And I think another question is, will foreign countries dare to become more dependent on China and the renminbi, because that means that they will also be vulnerable to potential Chinese sanctions in the future. That's quite an interesting subject as well. I doubt it, but let's see. And but another thing that I think China we haven't talked about today, and that could be the theme for another podcast. But China is also pushing its digital currency as one way of making the renminbi more used globally. So that was one of the questions. We I think we can end on another also short question, which is what does this mean? All of what we have discussed today. For if you're an investor or financial investor or corporate investing in China, what will this mean for you? All of this that we discussed and the renminbi becoming more important. And I think for corporates, we already see this because among SEB's clients, corporate clients in China, many of them are already using the renminbi for their cross-border trades, not least with their you know uh, headquarters in Europe. So they're already using the renminbi quite a lot for international trade. Many of them have today renminbi cross-border cash pools as well. So they're getting more used to this. And I think for companies, of course, it will be a question. When the renminbi becomes more used and you have more exposure to the renminbi, then you also have to be more read up on the regulations. How is this developing, and of course have a view of the exchange rate of the renminbi in the future. So those are a few things to think of. Anything you want to add to that, Sean?
Yeah, I had a couple things. First one is on diversifying away from China. So we've been talking about this China plus one strategy that, okay, US is going to put sanctions on you, so maybe we should move to Vietnam or to Indonesia. But because of this renminbi regional strategy that they're trying to spread renminbi within Asia, that maybe that U.S. sanctions can reach China and its neighbors too. So if you really want to hedge that China risk, maybe you have to move all the way to the U.S. or all the way to Europe or all the way to somewhere like Mexico, and that going to Southeast Asia isn't enough. Uh, Another one is on the strength of the currency. So as China tries to become like the German Deutschmark, then that currency and the central bank was known for very conservative, very low inflation, always keeping interest rates higher, and that led to the stronger currency. And so that can be the implication for investors investing in renminbi assets that it's at 6.8 something now, and these are the things it's not going to go to 6.2, it's going to go to 4 or something. It's going to be a much bigger move. The last thing I think is the role of Europe, because dollar diversification, it was actually started much more by the Europeans over the last 10 years. They're the ones building up the euro and the ECB system to kind of compete with the dollar. But all this kind of reversed when this Russia-Ukraine war started, and then Europe and US kind of came closer. But as you mentioned with the very beginning, a lot of European leaders going to China recently, um, maybe they need to start to hedge themselves against the dollar as well. So Europe can take on this role and build up the euro as another diversification to the dollar. And that can also help China on its own as well.
Yeah, and on the financial institution, financial investors side, Sean, it's obvious also that if you are a big portfolio manager of bonds today, the RMB has been included in several of these global indices. So uh, through that, you will also be, if you want to have a Chinese exposure, of course, you will also be, if not forced, then at least inclined to look at the onshore Chinese capital markets as well. And the same goes for equities for that matter. Sean, do you want to sum up our discussion? This was a very interesting discussion. What are your key takeaways from this?
Yeah, if I had to narrow it down to kind of three conclusions, I would leave it at this. The first is this China's shorter term goal to be the regional currency in Asia, instead of trying to beat dollar right away, and that's kind of replicating the German Deutschmark model. I think that's kind of the shorter term goal for China. Second, we talked about the three properties of money, and the one of them, medium of exchange. I think that's where China's worked the most, and it's progressed the most about the infrastructure of renminbi. Store of value, I think it's still a little bit tough. Unit account as well. But I think the one you mentioned about kind of trading carbon, like newer commodities in renminbi, I think that would be an exciting. And then the third thing, I think, is just generally that we should never underestimate China, um, because China has a long-term strategy, and they're doing all these small things, which is very difficult to track. But they do have these strategies, and they are following up on it, and they do make progress. So it's something that we need to follow and track and connect the dots together because it does have implications. Maybe not this year, but over the next 2, 3 years.
Very good summary. Thanks a lot, Sean. Always great to have these discussions with you. So let us stop here. Thanks a lot.
Thanks, Frederick.
And also thanks to all our listeners. Thanks for listening in. We hope that you found this discussion interesting, and we will soon be back with more Inside Asia podcasts.